Hello students, I am Dr. Manish Puntambekar from the Department of Commerce, the Bhopal School of Social Sciences. Today we are just going to understand here, discuss the valuation of goodwill through some numerical questions. So let's start. The question is given here, A Limited is to be absorbed by the B Limited, and to decide upon the purchase consideration, it is necessary among other things to value the goodwill attaching to the business of A Limited. The two companies agree that business of the calculation of goodwill shall be 3 years purchase of the average annual super profits. The net profit being averaged over 5 years and subject to whatever adjustment. So in this question actually we will have to calculate here goodwill, and already the 5 years profits are already given there. The profits of A Limited for the last 5 years before charging tax at the rate of 25% are as follows. So here from 2017 till 2021 profits are given, and the directors of A Limited, 3 numbers will be appointed to the board of B Limited. Here in this question, directors fee has to be paid rupees 5,000 for 3 directors. So for such services, the average capital invested in net tangible assets over the period is rupees 1,80,000. Here average capital employed is given rupees 1,80,000, and the rate of return is already given 10%. So it will be used to calculate here normal profit. Let us understand the solution of this numerical question. Here this step 1 says average profit already we have calculated by taking into consideration all the 5 years profits, and these are 5 years profits are given. We have added it, and total it is divided by 5 years, so that we can calculate the average profit of last 5 years. According to step 2, now we are just going to calculate maintainable profit, future maintainable profit, which is called FMP. So according to it, average profit already we have calculated rupees 58,000, out of which directors remuneration will be subtracted, that is 5,000 into 3 directors. So ultimately 15,000 rupees must be subtracted, and the balance will be left only 43,000 rupees over there. Out of this 43,000 rupees, 25% will be deducted as general reserve, because we are just going to transfer 25% of the remaining profit, that is 43,000 rupees to general reserve, and which is amounted to rupees 10,750, and finally we see the total balance is left only 32,250, which is also called future maintainable profits. According to step 3, normal profit has to be calculated, the formula of which capital employed into rate of return divided by 100. Here normal profit will be 1,80,000, its 10% will be 18,000, because 1,80,000 is capital employed, which is already given in the question. Rate of return is 10%. So according to it, the normal profit will be 18,000. If we subtract this normal profit, which is amounted to rupees 18,000, from this FMP, that is future maintainable profit, worth rupees 32,250. So finally our super profit will come 14,250. And step number 4, according to this step, goodwill has to be found out, and according to this formula, super profit into number of purchases years, which are already given in the question, that is 3 years. So if we multiply this 14,250 rupees as super profit into number of purchase years, so we will find here 42,750 rupees worth of goodwill of the business. Now problem number 2. According to this problem number 2, the net profit of a company after making provision for taxation for the past 5 years are already given: 40,000, 42,000, 45,000, 46,000 and 47,000. The capital employed in the business is rupees 4 lakhs, which is already given in the question, on which a reasonable rate of return, that is 10%, this is the expected rate of return, 10%. It is expected that company will be able to maintain super profits in the next 5 years. On the basis of this question, actually these informations, we will have to find out here goodwill, and in this question goodwill will be calculated by 3 methods. The first method is called annuity method, that is given some informations are given. calculate the value of goodwill on the basis of annuity method, taking present value of 1 rupee for 5 years at the rate 10% interest as rupees 3.78. The value of this annuity it is 3.78. From the point of view of this second, according to this second method, the method is capitalization method. So, in this method actually we will have to capitalize of goodwill. Goodwill has to be capitalized in this method. And finally, in this third condition, we have been given to calculate this goodwill some information on the basis of super profit. So, on the basis of these three methods, we are just going to understand how to calculate the value of goodwill. First of all, we will understand here basic workings. According to this first step, we will have to find out your average profit. So, average profits have already been given in the question from 40,000 to 47,000. So, if we add together all 5 years profits and divide it by 5 years, so finally we will get here 44,000 rupees worth of average profit. Then we will find out here normal profit. According to this formula, capital employed into rate of return upon 100. Capital employed is already given rupees 4 lakhs, and if we calculate 10% of this 4 lakh, we will get there 40,000, and this 40,000 will be our normal profit. According to this step 3, now we are just going to calculate here super profit. The formula is average profit minus normal profit. So, average profit already we have calculated here 44,000. If we subtract here this 40,000 rupees as normal profit, so finally we will get there 4,000 rupees worth of super profit. Now, we are just going to understand here how to calculate goodwill by all the three methods. The basic calculations already we have done. Now, according to the first method, goodwill by annuity method, so according to this formula is super profit into annuity factor. So, annuity factor has already been given in the question, that is 3.78. If we multiply this super profit, so ultimately this 15,120 rupees will be the value of goodwill. Now, second step, according to this second method, goodwill by capitalization method, in which capitalized profit has to be calculated. For this purpose, average profit will be multiplied by 100 and divided by rate of return. So, 44,000 into 100 divided by 10. So, capitalized profit has been calculated here, which is 4,40,000 rupees. Now, goodwill by capitalization method. So, the formula is capitalized profit minus actual capital employed, which is already given in the question, worth rupees 4 lakhs. So, if we subtract this 4 lakh rupees worth of actual capital employed from this capitalized profit, finally we will get only 40,000 rupees, which is the value of goodwill. And according to this third method, which is goodwill by super profit method, as all of you know, goodwill according to this super profit method, the formula is super profit into number of purchases years, which are already given 5 years in the question. So, if we multiply this super profit worth rupees 4,000 with 5 years, we will get 20,000 rupees worth of goodwill. And finally, these are the methods of valuation of goodwill. So, students, today we have discussed how to calculate, how to evaluate the amount of goodwill by different methods. In next videos, we will discuss some other topics. Thank you so much.